Hello everyone, welcome to our webinar on SEO building versus buying with Simmonds. And thanks a lot for joining us today. Let me just go shortly to the introduction. And my name is Thomas Lokas. I'm a strategic consultant here at Similarweb. And with me, I have amazing Ross Simmonds, founder of SEO at Foundation. And please, Ross, if you can introduce yourself really quick, I think it will be amazing for our audience.
Definitely. Hi, everyone. Welcome. So looking forward to this. I love this concept of buying versus building. It's something that I think doesn't get enough love. As Thomas mentioned, I'm the CEO and founder of Foundation Marketing. We work with ambitious B2B brands across the globe, creating content strategies and actually developing content for them. So we're going to be talking about something that I'm super excited about today, buying versus building. So thanks so much for joining and attending. I see some familiar names in the attendees list as well. So thank you all for showing up. This is going to be great. So I'm looking forward to chatting with you today about buying versus building and why it can be essentially a great shortcut to unlocking SEO and content success.
Thank you, Ross. And let me just quickly remind you guys that you please ask questions. You can do it in the question panel. And it's very simple and it's super useful for us as we do these webinars live because we want to give you a chance to ask questions and for us to answer them. We'll try to answer them at the end of the session and as many as we can really. So without further ado, let's look at what we're going to cover. So first of all, it's going to be domain authority, and mainly what we're going to look at a domain on topic authority is just to review what it is and how it works in general. And then we'll look at Hubspot case study. And for the last part, we're going to look at how to actually assess the value of potential domain or a website you maybe will be thinking of acquiring. And what we're starting on is domain authority, because without really understanding what it is or what we're talking about, it's going to be difficult to follow the rest of the conversation. And domain authority is really a score that a domain or website is given, and it's been actually originally built by Moz. Now a lot of other platforms also have it, but what it really shows is the strength of the domain. So the stronger the domain is, the easier it is, or the more it ranks at SERP results. So what it basically means is that a stronger domain will have a higher domain authority. So as you see here, an example in Google, you see 95 domain authority. If it will be a newer website, if it's completely new website, it will start from 0, maybe 1, maybe 2. And more links you acquire, it's mostly backlink based, as backlink is one of the main really ways for Google to understand how strong a domain is, more links you get, and also the content of the page. So it's something that is very important and used a lot in SEO. And from one side, I see it being super useful. I use it for most of my clients as a benchmark that you're trying to grow and become better at, but it also is misunderstood in many cases. And one of the things is how it's really misunderstood. I think what we expect to see in many searches really is that the better the domain is, that means they're always going to rank at the top. Even if, let's say, you just write your first blog post about a certain topic, but you have really high domain authority and you never wrote any content on that topic, and maybe the content is not even that great, it doesn't mean that you're going to outrank the lower domain authority websites. And that's what a lot of people expect, is that if they're going to improve their domain authority, they're automatically going to be better than other websites that are smaller. So it is useful, but it's also misunderstood. And what we often see is that actually it's not only domain authority that matters, the topical authority, your niche performance. So let's say you are really good at certain niche, but you are getting into new one and writing new content that you never wrote about. You don't have enough topical authority in that section. You're not going to outrank the other ones that have lower domain authority in general, but have topical authority that's better than yours. And exactly. Ross, I know you're an expert in this, so please fill in.
I think you summarized it well. I think the overarching idea and a good example of this would be like, let's look at a company like Nike. Nike is a massive brand. They have built up a lot of mental equity in the minds of the consumer around sneakers and athletics and fitness, etc. So they're more likely to rank for something like a great sneaker or top sneaker, best shoe, best athletic performance gear for when you're running in the winter. All of those topics are things that, because they have a high domain authority on and just general topic understanding of, they're going to rank in Google and capture traffic for it. Now, if Nike was to say, we're now going into the world of sleep training for babies, and this is relevant to me because I have a toddler who doesn't sleep, that might be difficult for Nike to rank and outrank someone who has built years and decades of content and topical authority on that space. Google views another site as being an expert in sleep training. It's going to be difficult for Nike to catch up. And sure, Nike could probably publish a piece and they might rank on page 2, but for them to rank on page 1 is going to be an uphill battle, even for a brand that is so established as Nike. So what you have to think about as you go into new markets, as you launch new features, as you launch new products, is realize that, one, domain authority isn't the end all be all. Yes, it's important, but there's other factors that you also have to consider before making a decision that, okay, we're going to jump into this market, we're going to jump into this space. And you have to ensure that there are other metrics that you're considering as you make that decision.
Exactly. It's not a fit-all solution. It's going to work in your niche. It's going to work where you have the domain authority, but it doesn't mean that you can just be everywhere and it's going to help you to rank in all other sections of really different industries. And this is really where the problem that we're going to try and tackle today is coming from, is that a lot of companies are trying to get in new industries, and many cases, they don't realize that it's a very uphill battle and it's not as easy as it sounds in many cases. So let me just go to another slide. So this is just an additional example of building automation systems. And this is one of the examples where we can see that a website with the lower domain authority, a lot lower domain authority, 28, is outranking a domain authority for 90, even though it's a very similar keyword and it's very similar topic as well. So let me just go and give Ross the ability to share his screen. And I think we're going to go into the HubSpot case study.
Awesome. So let me... Great. So just want to confirm that you folks can see my screen. If you can, jump into chat and just say, I can see it. I would love to know. I see a few, so that's awesome. That means you can. Good to see. All right. So why HubSpot bought the hustle? If you haven't been following, very recently, HubSpot made what I believe is potentially one of the best acquisitions of this decade. We will see. The decade is just beginning, but I think it's going to be one that will be studied in university classes for decades to come. And the reason is they bought The Hustle. And if you're not familiar with The Hustle, it's essentially a media property that for the last few years has been creating content on business, on topics like startups, on growth, etc. The rumors are that they spent anywhere from 25 to 30 million to acquire this company, which is essentially a media site. And if you're not familiar with advertising prices, that's actually the cost of about 6 Super Bowl ads. So in comparison, they spent as much as some brands would spend for 6 Super Bowl ads to acquire The Hustle. The Hustle special because it not only is a website, but it also comes with a paid website where people will actually pay a subscription to get access to this thing called Trends, which generates, based off of Similarweb data, anywhere from 500 to 2 million visits per year. Combine that with The Hustle's main website, which generates between 5 to 8 mil, over 11,000 people inside of Facebook groups that they own, and a subscriber list for their email of 1.5 million newsletter subscribers. I believe that this was a brilliant strategy, and I'm excited to chat with you today about lessons that you can take from HubSpot acquiring The Hustle as you start to think about your own acquisition strategies and how you can potentially find a shortcut. Instead of always building content and building out landing pages, maybe you too can acquire some entities and assets that already exist today to accelerate your growth. So let's take a step back and look at HubSpot and why they would have made this type of a decision. So when you look at HubSpot, You look at their traffic year over year, they've been generating a significant amount of visits to their site because they have been a staple in the world of marketing as best practices for blogging, SEO, and marketing. When they create content, people listen. When they create content about blogging, when they create content about best practices, people listen. They have certificates and courses that you can take. They have done an excellent job at owning a good chunk of the narrative around things like inbound marketing. For example, they created and coined the term inbound marketing, and as such, they owned it in sense of their site. It's estimated based off of Similarweb that they were doing about 360 million annual visits per year solely off of a combination of paid, organic, etc. Now, things get interesting when you start to dive in a little bit deeper to what HubSpot has been doing. And it gets interesting when you start to dive into the fact that like this acquisition isn't just an acquisition to start a new business. This acquisition isn't just to say, all right, we want to be cool. This was a strategic play by the team at HubSpot to capitalize on something that they were losing sight of. And that is the fact that for the last few years, they have started to see a dip in their organic traffic. So the closer you get to looking at organic traffic for HubSpot, it turns out that on their blog in particular, they were starting to lose traffic. Why? Because the message, and Thomas talked about this earlier, that they had built up so much equity around and DA around, which is marketing, was beginning to be diluted. What do I mean by that? HubSpot as a brand started in the world of marketing, but they have since introduced products such as CRM, customer service, chat, etc. They have even introduced CMS. So when they go into these new markets, it's difficult for Google, it's difficult for the world to even realize HubSpot's no longer just a marketing platform, they are a sales platform. So as they start to create content on topics that are completely outside of what is traditionally seen as their domain authority and what they have value in talking about, they started to see a dip. In fact, the dip represented anywhere from 500,000 to, let's say, 1 million monthly visits. That's a lot of traffic to lose. Now, when you look at that and you actually do the numbers, the amount of traffic that they were generating organically and that they had lost was roughly $25 million in terms of the actual loss. So if you were to spend PPC dollars on organic SEM advertising, you would have to spend 25 mil, which just happens to be around the rumored amount of what they paid for the hustle to get that amount of traffic back. So that dip cost them 25 mil in terms of essentially organic traffic that they were generating. They've lost it. They then made the decision to acquire the hustle, which on its own not only makes up for that dip, but it does something else. It does something that is often overlooked in the marketing landscape, which is giving HubSpot now access to a handful of different opportunities. Based off of what the data shows in Similarweb, you can jump in and you can see that they were doing about 700 monthly visits. That's a lot of people going to the hustle and consuming their content on a monthly basis. They were generating 480 uniques. That's, again, a lot of people. And this is just one of the assets that the hustle actually owns in its media empire. They also have trends, they also have Facebook groups, and they also have a newsletter. So when you combine all of this, I believe that there's no question that the ROI on that $25 million cost is going to be there. Whether they spend 25 or 30, 6 Super Bowl ads, the fact remains this acquisition lasts forever. An ad on the Super Bowl is temporary. You put up that advertisement on the Super Bowl and you get some people tweeting about it, but the next day everybody has forgotten about it and they're talking about what Beyonce just did on Twitter. It is no longer relevant to you. When you acquire a site, you now have access, if you maintain it correctly, to do two things. One, you can impact the trajectory of that site and you can allow it to be elevated if you have a content team and a content engine in place that will allow it to grow. But also you have the ability to get access to the people that are already on there consuming the content. And that is what the Hustle and HubSpot acquisition is now going to provide them as a team. They now have access to all of the people in their Facebook group. They now have access to everybody on that newsletter list. They now have access to the 700 and some thousand visits that are visiting this site. And recognizing that they're moving into new markets, they're able to reap the benefits. Again, when you look at the fact that they are not just getting their traffic back in terms of the money and the revenue, they're also getting visits from trends, they're getting people from Facebook groups, they're getting these newsletter subscribers. That dip is able to be written off as a write-off and reacquired through this acquisition. So this is what the possibilities look like when you start to buy versus always trying to build. If HubSpot was trying to build this, they would have a very difficult time. Why? Because the audience of the hustle and the audience of trends isn't just marketers. HubSpot has built up a reputation amongst marketers, but they're going into new markets. To go into new markets, they need to diversify their content. They need to establish domain authority in different fields. And it just so happens that the hustle already had done that. So them acquiring them makes complete sense. Now, this is where it gets even more interesting. There's icing on the cake when you dive deeper into the ins and outs of how the hustle is acquiring its traffic. When you, again, jump into Similarweb and you can look at the hustle.co and you try to see where's their referral traffic coming from? Where are they actually acquiring a lot of their visits? You can see 48% of the top referring sites, the top traffic coming into the hustle is actually coming from Y Combinator news, aka Hacker News. And if you're in the engineering world or if you're in the tech world, you're familiar with Hacker News, as it's essentially the Reddit of the tech industry, where everything that goes on in tech that is influential and interesting and very technical focused essentially starts on Hacker News and is talked about on Hacker News. And if you are able to get people consistently from Hacker News to your website, that is a very valuable situation, because the people who are using Hacker News are decision makers, they're engineers, they're top executives at technology companies. They are people who you want to connect with if you're a brand like HubSpot and you're starting to pivot out of the world of marketers and into the world of product people, into the world of investors, into the world of startup owners, and into a world that is different from where you got your start. So by them, again, acquiring the hustle, they're actually also acquiring a consistent engine and processes and strategy for how the hustle was able to capture 48% of all their referral traffic from Hacker News. That team that cracked the code of Hacker News now works at HubSpot. So HubSpot will now be able to reap the benefits of that. And you can see like the content that they have been able to generate traffic from Hacker News on is getting anywhere from 200 to 400 comments. That on its own is likely driving 60 or 70 or 80,000 visits to now a HubSpot owned asset. And if they can do that consistently, again, this is going to go down as one of the most impressive and successful acquisitions in a very long time. Again, this is why it's a great acquisition for them. HubSpot started as an app. This is directly out of their investors deck, where they started their business as an app. They are quickly becoming a suite with a marketing hub, a sales hub, a service hub, CRM, and a CMS hub. They're creating all of that to become essentially a platform. When you go into a world where you're focusing on driving all things growth for a business, it is no longer just about marketing. You have to attract salespeople, you need to attract founders, you need to attract product people, everyone. So when you do a quick analysis using a tool like SparkToro of the people who follow the hustle, you'll start to see things like co-founder, product, startups, growth, things that aren't necessarily going to show up if you were in the marketing lane. Thus, this acquisition is opening up a growth strategy for CMS, service, and sales in a way that their marketing engine that they have built for so long is no longer able to do. So I want to give you folks something that's very tactical and insightful that you can take away from this, that you can use in your own next steps. I've acquired tons of media properties over the years, ranging from Facebook groups to actual websites in a whole bunch of different niches, and they can pay significant dividends. But what I want to share with you is a simple two-step process that will help you find your opportunity and analyze an opportunity before you actually get into the weeds and start doing your due diligence on a property and an asset. You'll notice I always say asset. That's because I do view digital real estate as an asset. I don't view it as just a website. These are assets. And when you are acquiring these assets, you're acquiring them, you need to think about it the same way. These are investments that you're making with your capital, with your time, and you want ROI on the back of it. There's sites like Flippa, MicroAcquire, where you can actually look into sites that are actually trying to sell, sites that are looking to sell off their products, whether it's a SaaS product or it's just a media property. You can use these sites to identify them. Now, when you do get this, you will be able to get some access to numbers. For example, MicroAcquire will send you details around their annual recurring revenue. This one's doing about 26K a year. It will tell you what their profit is. It will tell you some of their competitors, when it was founded, et cetera. It will give you all of that information. Those are the benchmarks that you need to know around what it's doing today. What you want to be able to do is also look at the opportunity that this site and this asset that you are potentially going to acquire, going to provide you with in terms of the future. And I think leveraging tools like Similarweb offer you insight into that. If you take one of these URLs, you plug it into Similarweb, such as trends, which came with the acquisition of the Hustle, you can see, wow, this site is generating 800 and some thousand visits. The Hustle is generating about 700. I'm getting both of these for the price of one. Ching ching, this is an opportunity. That's what you have the ability to unlock after you identify the opportunity. You start by identifying it, and then you want to analyze it. So again, this is why I always say you want to think about both building and buying your assets. Recognize that both will take time, but you have to figure out what shortcut is going to give you the best opportunity to win. And sometimes buying an asset is going to pay more dividends than actually building it from the ground up. So with that, I'm going to pass my mic back over to Thomas, who will chat about assessing domain and topic value.
Yeah, thank you, Ross. I think that's amazing stuff. And I think you nailed in the point. Really is the main focus here is that it's understanding the return investment, really. Like, you can always build a website and you can always try and build that domain and topical authority. The problem is, for the business, it's all about the return investment. And it's not even that Hustle, like HubSpot could not get to the Hustle level of trends. The problem is how long will it take? Exactly. And for the business, if you do it faster, you can get so much more revenue in 1 and 2 years that basically saves you all the money that you acquired in the first place. And I think if you're saying it's 20 plus million for acquiring Hustle, it's amazing value for HubSpot. They can make so much more money from acquisition just of those customers potentially. Yep. And the fit is so good in terms of what they're offering and who's visiting that site. So I think that was a genius move by them.
I agree. I think one thing I will also throw out there, because I know a lot of us might not be necessarily working with HubSpot budgets, you need to keep in mind there are media sites and media entities across the globe of different sizes that you can acquire. You don't have to drop 20 mil. You could drop literally 2,000. You could drop 20K. Like, you can drop smaller amounts because every niche is going to be different. You might not be able to get the rewards and the returns that a Hustle gets, 700 and some thousand, 1.5 million across multiple platforms. But if you can buy microsites in your niche, it can be a shortcut. So rather than you trying to build from the ground up topic authority and topic value and domain value, et cetera, which Thomas is going to talk about now, you can get a shortcut by just acquiring a site that already exists in the lane that you want to go in.
Yeah, and we've seen in many industries, like the most recent one I spoke to, one of the biggest French shopping centers, and they basically acquired a organic food online business because they tried to push their organic food through there. And for them to build that out, which is one of the biggest trends in the industry, it would take them long, and they don't even know if they can do it because they aggregate through all of the other companies as well. So it's huge for many companies, many industries. It's not only for content or SaaS companies. It's basically any industry can take advantage of it. Is that we can see it more maybe in the SaaS because I think they're just more advanced in their marketing, but it's basically everywhere. And when a lot of companies do it, it's a great reward, especially if you can actually estimate. So I think what we're going to move on now to is understanding better who you want to go after and evaluating them. Because as Ross showed you, like, you can get some numbers from, let's say, website that basically aggregate all websites that sell, but it's not really all you need to understand and find the best opportunities for you. Because ideally, you don't even want to go after the ones that are already selling. You want to go after the ones that you find that are perfect for you and then evaluate them. So for this use case, we're going to use Peloton as an example, and Peloton was growing a lot. It's a exercise equipment company. They started with bikes that shows you workouts. So it's a huge business right now, as a lot of people are working out at home. And I've seen a lot of my friends actually buying them. They're quite expensive, but the value they provide is actually superb in the environment when you can just work out at home. So one of the things that we've seen is that they were growing exponentially since like November 19. We've seen the small decline in February 20. And then when COVID hit, we've seen such a big increase, and in general in the industry as well, with Nordic Track also improving overall. So what they've been doing is actually trying to expand in other places. So they added new equipment. They started doing new workout plans. So basically, they're expanding the offering as well, because they have all this audience right now and they don't know for how long they'll be able to keep it. So one of the things that we've seen is that they can also move into a similar space, like let's say HubSpot is moving to hustle, to people interested in business. For Peloton, what is very useful is people interested in fitness and improving themselves. So what is the next logical step is actually going from working out routines, is actually going to diet and nutrition. So we're going to try and find the best opportunities for them to move into that niche. So the first thing that we can look at is actually look at fitness and health and diet really industry and see how difficult it is to get in. And from here, we see that the websites that are the top positions and they get the most of the traffic. So here we see search traffic share for diet industry. So diet plans, healthy eating, and we see Healthline, Good Housekeeping, Eating Well. So a lot of different websites, and WebMD with very high domain authority and also high topical authority, because many of these actually focus specifically on eating or just general in health. So it's not an easy niche to get into. So for Peloton, who has high domain authority in general, getting into this space would be very complicated. So what they can actually do is focus on niche websites for niche diet plan keywords that they are trying to attract customers from. And from here, we can find potential opportunities. Who's performing really well, but is not that big in the industry, that we can actually acquire and just focus on the exact customers we want to establish that additional section to our offering. And here we see Eating Well, Nutrisystem, Shape.com, Everyday Health, and Diet Doctor. So diet plan websites who actually provide you with great diet plans. And just to evaluate it further, as we already spoke about it, is you don't want just to see the revenue or anything. You want to see the traffic and growth over time. Just having traffic for the last month or last 12 months is not that useful. But if you want to understand how the website is performing, you want to buy into something that is actually growing. And here we can see that Eating Well, Nutrisystems, and Shape.com were growing quite a lot, with Nutrisystem growing a lot more, but then Everyday Health and Diet Doctor in decline. But this decline is actually not that huge. So I would not just base it on this. This is very useful to know the direction they're going and to evaluate it further to understand why is this happening. And this is the question you would bring it to them. And then you also can compare them in terms of size. But the next stage is really important, is that you want to know the marketing channels, because one of the reasons you're acquiring them is not to get there just direct traffic, because you want to acquire them additionally for content, which we're trying to get that SEO authority, try to get that content where people are visiting them for the value and not just the brand. Because Pelotons already have quite a strong brand in general in terms of fitness, we want to get something that actually provides good value in terms of SEO and content. So here, if we look at, let's say Nutrisystem, who grew a lot, we can see that most of the growth is actually filled by paid search and display ads. And when you're trying to find opportunities to buy a website, to buy a business, you don't want to buy someone that actually has a lot of traffic, but most of the traffic is driven by paid channels. Because once you're acquiring them, you'll have to pay those bills. You have to pay PPC and display ads to actually keep and sustain that growth, which is very counter beneficial to you. You want to get something that is actually performing well, that you can build into your offering and actually expand it overall. So does that make sense, Ross? Would you look at it this way as well? Would you add marketing channels to your evaluation?
Definitely. I was just about to send a message to the chat to say, folks, this is it. Like, this is a key thing that you need to think about, because two things. One, it gives you insights into how they're actually growing and what's driving that growth. And that offers you two benefits. One, it offers you the benefit of knowing whether or not this is an opportunity worth pursuing. But two, it makes it easier for you to negotiate in a way that benefits you. So if you see that they are actually generating the vast majority of their traffic from display ads and paid advertising avenues, you can say to them, look, I know you folks are generating X amount of revenue per year, but you're also paying to acquire that revenue. And they have to be transparent about it now, because you now have insight into it. So you can have those conversations. It gives you a bit of an advantage going into a negotiation. And you can say, look, I want to look at how much you're spending in display every year, and I'm going to reduce that from my offer. So there's a bunch of value here, folks, that you definitely need to consider. You also want to look at the direct, because that could be an interesting opportunity where is there brand equity that's been established where people are coming to this directly? And if so, that's another win. So you want to consider this. But I love this. I think studying the actual channels in which the people are being acquired is so key, because if your goal is to acquire organic traffic, then that's what you need to focus on. If your goal is purely a revenue focus, then you're going to shift your focus that way. So you have to start by understanding your goal and then ensure that you're looking at these channels to ensure it's aligned.
Exactly. No, it's actually a very good point, as it is not only just for information for picking them, but for negotiation, because it's one of the biggest parts of this acquiring challenge is that negotiation can be it can be such a big difference. It's not just you saving a couple of bucks, it's saving 10, 20 million on it.
Exactly. And you want this insight, right? Like, this is the insight. And I think, again, I want to just take this back a little bit further, and then I'll pass the mic back. But folks, like, when we are making personal financial decisions, we don't just jump into things without doing our own due diligence. And leveraging a tool like this gives you the ability, to the same way that you're not going to buy a bond without having an idea of what the future could look like, or stock without having a bit of an insight into what the future could look like. You shouldn't acquire an asset without knowing the fundamentals of it. You would look at the balance sheet if you were buying a stock. You want to look at the marketing channels if you're buying a website. So this type of thing is so key, so important when you're making a decision to acquire versus build from the ground up.
Yeah, exactly. So let's move to the next part. And it's what we added not so long ago was actually understanding non-branded traffic. So instead of looking just on organic traffic, we want to understand, okay, is it branded or non-branded? And in many cases, in many platforms, you can just look at the amount of it, but it's very difficult to distinguish between them. Because in terms of branded traffic, it's very useful in terms of understanding your brand value, but non-branded traffic, it's actual keywords that you would normally pay for to acquire that traffic. So it's an additional part to your evaluation that is very important, is how valuable the traffic is in terms of CPC value as well. So, and to actually get to the end of it and estimate the potential value of this organic traffic in terms of non-branded ones, you can look at the top keywords, you can look at traffic per keywords, and then multiply it by CPC for every keyword and its traffic. And you'll get what everyday health is organic traffic value for the last 3 months. And this is the beautiful thing about it, is that you don't need to guess as much anymore. You can just look at the keywords which are driving traffic, how much they cost per CPC, how much traffic they drive, and here you have what you're actually getting out of it. So if you're acquiring them, you can either bid on these keywords if this is the audience you're actually looking for, or you can acquire them and understand how much you're saving. So again, as Ross said, is one thing is to evaluate the opportunity and also negotiate it. So you will know if you're getting the good or bad value, which is the most important thing, because when you're acquiring another company is such a higher risk environment that you want to know and you want to prove to your stakeholders that you actually made the right decision, as it's a very difficult process. And with this data, it makes it so much easier to do. And yeah, I think that's it. Ross, do you want to add something about the last slide or in general before we go to Q&A?
Yeah, no, I think at the end of the day, I hope folks are able to see the opportunity that exists when you move down a path of not always only thinking from a lens of let's build this from the ground up, and also considering the idea of buying. I think there's a lot of value to be had there. So yeah, let's jump into some of the Q&A. I've seen a couple questions come through. I think it would be awesome for us to jam on those.
Yeah, of course. I think the first question is, Ross, is so how does this help HubSpot domain? How are they linked?
Great question. So in the short term, the acquisition of The Hustle has not had a direct link with the HubSpot domain, outside of the fact that they wrote a blog post about the acquisition, and that blog post got a bunch of links. Outside of that, there isn't a direct connection at this point. If you look at some of the language and conversations that have been had publicly between the CEOs of the two organizations, there's been a bit of a clear message to the public so far that they're going to allow the hustle to stay weird and stay their own course. So with that insight, it's demonstrating that yes, now the HubSpot entity has access to all of these media properties and can put their ads everywhere and can do a few things like announce their products to these audiences and their features to this audience. They can share podcasts with these audiences, etc. The actual help that it's going to provide the HubSpot domain isn't necessarily clear yet. Like the writing is not on the wall as it relates to how this will influence them. There is a potential that you'll see more content assets going up on the hustle that reference HubSpot, and thus HubSpot is going to get more links through those assets or via trends, etc. And then that domain authority will be passed over to HubSpot, but HubSpot's already good when it comes to domain authority. So the ROI there's probably not going to be that significant. I think what it does is more qualitative in terms of the impact that it has on the HubSpot domain, which is positioning and allowing HubSpot to now be active in industries and stories and groups and at boardroom conferences tables that they might have had challenges getting to in the past. So long story, a little bit longer, the direct SEO benefit to the HubSpot domain is not clear. I don't think it will have a massive one in that regards in the short term, but long term, if the hustle did blend into the HubSpot site, if they did move trends into the HubSpot site, we could see a massive shift. But in the short term, a very crystal clear impact and linkage is not obvious.
Yeah, I think that's a great answer. And maybe, yeah, there are potentially multiple ways of doing that as well. If it's a small website and all you're looking at as well as like an SEO juice, in many cases, you just transfer it, all of the content through you and you 301. There are many ways of actually doing that, but yeah, it depends on the use case per use case basis. We have one more question. How does Similarweb decide which sites to include? So from this side it's very simple. We include most of the sites. It's not that we crawl them or anything. They're automatically added because we have a huge behavioral data and additionally learning set that we combine together. So most of the sites we're looking at, they will be added to Similarweb. They're already there. Most of the sites, even under 5,000 visits, they are there. Additional questions. How would you put value in a Facebook group? I think this is a great question. Ross, if you can answer this.
Yeah, I love it. So I've bought a few Facebook groups, and the value that you get from them is based off of the membership and the activity that's going on within. So what I always like to look at is the engagement rate and see, like, for the last 20 posts that were published by the admin, what was the engagement like on those posts? And that can give you an insight into, okay, what is this actually going to be valued at for me? What I also like to do when you're making an acquisition like a Facebook group is you actually ask the admin, the person who you're negotiating with, to share a piece of content in a way that would benefit your goals and your objectives. So for example, I recently bought a Facebook group that was in the world of plant-based food. and we had a product that was plant-based protein. We said, all right, hey, owner of this Facebook group, can you share a post written just like this promoting this product, and let's see what happens. Within less than 48 hours, that protein sold as much as we were going to acquire this Facebook group for. So we were like, ching, ching, let's move forward. This is going to work because we're going to be able to pay for this. So by getting them to demonstrate the power of their group, they don't need to know the numbers that you're able to benefit from. You just want to see if you can turn it into ROI. So with that one post, we paid for the acquisition and doubled up on the value over weeks thereafter. So yes, oftentimes those Facebook groups, people don't even know how much of a gold mine they could be sitting on.
Yeah, that's an amazing case. Yeah. And yeah, so basically what you're saying is that testing is the best way. If you can test, that's how you do it. Yeah.
Exactly.
Okay. Another question is, many buyers like to use traditional multipliers based on earnings, 3x annual. What about sites that have great traffic, domain authority, but haven't monetized themselves that well?
Yeah. I think with that one, it's the best way to look at it is you want to look at the keywords that they're ranking for on Google. And hopefully, again, you go down the path that Thomas shared around, like, let's see if organic is a true driver of traffic for them. Then you're going to analyze the keywords that they are ranking for, the percentage of traffic that they are acquiring for those. And then you're going to multiply it by the average cost per click that you would have to pay Google to acquire that traffic. So the dip that we saw for HubSpot was about I think it was 25 mil that we said, no, it was $1 million a month. So they lost about $1 million a month in terms of traffic. When we did the cost analysis of how much it would cost to acquire that traffic, it was about 25 mil. So based off of that method, you should be able to see a site that you're about to acquire. What is the value of that site from an SEM pure perspective? If the keywords that they're ranking for, the traffic that they're generating is worth, let's say, $5,000 a year in terms of organic, or 50,000 or 50 million, what I would advise is that ideally, and this is again like pure negotiation, ideally they're not sophisticated enough to know the value of that over the long term, which is a lot. And you offer like the year. So you say the amount of organic traffic that you're generating and the value of it is about this. We've done some calculations. We think that this is worth $20,000, not realizing that that $20,000 is going to be $20,000 next year too, and the year after. And if it grows because it's a high growth industry, it could be worth way more. So that's the play. You want to calculate the value of the traffic that they're generating. If somebody just has a website that's generating a lot of traffic on low valued keywords, like, I don't know, something like quotes, there's not a lot of value that you can acquire for the words quotes. So you might get a ton of visits for the word quotes, but you're probably going to have a hard time monetizing that unless you're just doing paid. So it's not going to cost you $15. But if you're ranking for CRM, okay, now we're talking. Like the keyword CRM is probably going to be a $20 CPC. If you're getting 10,000 of those a month, that's a very valuable asset, and the price is going to be higher.
Yeah, I think that's a great answer. Yeah, I think that it's a combination of things. Yeah, like the based on earnings, of course, you're acquiring a business, so you would take that into account. But like the main point why you're acquiring is not just on their own revenues, how much the additional revenue is going to get you. And This is the beauty of it, because they cannot monetize it as much as you can. That's where you, in many cases, are getting a better deal than they would normally get out of something else.
And you also want to get, like, as much as this has not been perfected yet, because there's a lot there, right? Like even what we talked about around the amount of traffic that the Hustle was generating from Y Combinator and Hacker News, those aren't things that you can just like say, this is how much value this is. That's kind of an untangible. And when you start to do the research into the back end of, oh, look, this is where the referral traffic is coming from, how can I use that? That's when you start to unlock insights into the valuation that they might not know and they might not see. So you might be willing to pay a little bit more because you know that that traffic is valuable, and they might not even be looking at their own referral traffic to realize how valuable it is.
Yeah, no, I think that's perfect. I think this was the last question. Yeah, I think we're done.
I think so. I think that was it.
Thank you, Ross. It was amazing, great webinar, and thanks a lot for your help and giving this super valuable content to our audience, because that's a question on a lot of marketers and business people minds, and knowing how to evaluate and making one of the biggest decisions in your business life is actually acquiring a different company is huge. So thanks a lot for joining us, and thanks a lot for amazing content.
No problem. Thanks for having me. And folks, if you enjoyed this, definitely connect with me on LinkedIn. I would love to keep the conversation going. Ross Simmonds, I would love to chat further. I geek out about this stuff all the time. But Thomas, Similarweb, thanks for having me. It's been great to partner on this.